is the kind of idea. The first buying on a downtick is usually going to be profit taking. The second buying on a downtick is usually going to be a long accumulation. So if we see a seller coming in from VWAP or below, so it should be around about VWAP, that's usually a good sign that we've got the right trade at the right price. So what we're trying to do is make sure we're getting the right narrative for these as stories. So let's take a look at it about, so how would it have shown up yesterday? These would have been the trades you would have had for yesterday, okay? These are the trades you would have had, you would have possibly have taken based on purely the time stamping of the trade log itself. So if you look at yesterday's trade log, you'll notice I'm not interested in these trades here. Why am I not interested in these trades? Because they're all coming through at the market on close orders. So it doesn't mean a lot for me. There's nothing in it for me to look at here, right? So the market on close, we might actually just take this up to 2050 and then just not have any print at all. So, just so that people don't think that there's some information in this. There isn't usually going to be any information during this period here, 2050 onwards. That's the market and close orders, and it doesn't have a lot of strength to it. But if you look at the very first trade we got yesterday, was at 1541. It was a sell order. You see that? This is London time, of course. 1541, it's a sell order. So if you look at where that sell order is, 1541 is this candle here, this green candle. Look at where the sell order is. It's a VWAP sell. Do you see that? It's a VWAP sell. So that's one of the strongest trades we can get is a VWAP sell or a VWAP buy trade. It's one of the strongest entries that we can have for any of these types of trade opportunities. So you can see that the next trade was a buy order here at 1608. Well, it's a buy order on a downtick. So it's a buy order below VWAP here at 1608. There's 1608 right there. See it? So they're buying this price here. Now, why are they buying that price? Because they're taking a bit of money. They're profit taking. So it's not until we see the second buy that we might be interested, right? It's not until we see the second buy that we might actually start thinking about the possibility that the bottom edge is starting to come in, perhaps, right? So that is a profit-taking entry area right there. As we go forward, you can see that we then see a second buy trade at 1916. It's offset by a sell trade. That could be a synthetic trade, of course. I don't know what it is, but it's way too low for it to be an algorithmic sell. So I'm not reading it as a straightforward algorithmic sell. I'm reading it as if there's going to be something more complicated by this. But the one that interests me is this second buy trade at 1916. Well, if you look at where 1916 is in the charts, look below the chart here, you'll notice that 1916 was this very last red candle. Look at that. The very last red candle. So that could be the beginning of an upside move. So obviously this could be the beginning of an upside move because it's so it's candle number 2. If we got a candle number 3, this would be brilliant. And you can see what happens. We're outside of 2 standard deviations. It looks good. And obviously what happened to the trade was we simply then rotated back to VWAP. So these could have been your 2 trades. The sell side trade opportunity there made an absolute fortune. It was 560 down to 320s, 330s. Huge profit of $5,000 a contract. And then a buy trade from 340 up to 520s effectively into the closing bell for a trade that made approximately 180 or $3,600. And you can see from that storyline, 2 trades effectively could have been traded. Sell side here and buy side here, and that's your day finished. 2 trades, $3,000, $5,000 to $3,000 profit swings, around about a total profit of about $8,000 a contract, $7,000 a contract from 2 trades. And they're time stamped. Look, they're actually time stamped so that it's not, we can't make it up. It's real time. It's time stamped for you on the screens. And obviously this morning, you can see what we've seen this morning. You can see that we had this block of selling all coming in at the same time, but that's on an uptick, right? So that's just profit taking. It means if we then saw another sell, there's a chance, not a definite, there's a chance If we saw the other sell, that would then be a short seller coming in. A fader effectively at the top edges. We haven't seen that yet. It hasn't shown up yet. So we know that that's not there yet. If it does show up, of course, that means that we would then look at this and say, well, there's a chance that there might be a trade coming in here. But you can see there was the first seller coming in there. That's a profit take for the buys. And we haven't seen the next seller coming in. And we've got obviously some nice top line liquidities. If we see a new seller coming in, there'd be a fairly good chance that the new seller coming in would be an opportunity to take the short sell away from that edge. We haven't seen it. It's not there yet. It doesn't mean it's not there. It just means we haven't seen it. And that's the whole point about designing out these, is to try and spot these as little ideas, these little opportunities to play into. Well, if you can make $8,000 yesterday on those two signals, even a little 5 lot on those two trades, guys, would have weighed you a $40,000 profit yesterday. That's pretty good. Or even on a micro contract, that made you $4,000 on a micro contract yesterday. 5 micro contracts, to be fair. That'd be pretty good. I think I'd be quite happy with that. So why am I obviously, why is this a trade that I'm interested in the first place? Well, of course, we can look at the price of volatilities. We had a little chat about this earlier on today, that vols went very bullish. And if you look at the pre-market vol, you can obviously change the storyline. Look at the pre-market vol. Look at that change there. Do you see it? You see it? Well, something's happening here, isn't it? There's a definite shape shifter coming into the markets here. Everything below that red line is a pin rejection. There's a pin rejection here, a pin here, a pin here, a pin here, and then we got another couple of pins here. The volatility is actually becoming bullish, and the price ripped away from this. This is the reason why I wasn't selling into the open in line with the tracker guys, because I felt that they were wrong that trade. I felt that they had that trade wrong, so I'm not going to sell with them. I said that to you. I'm sitting this one out. I'm sitting out from the tracker. I'm not going to join them on the short sell. So what about the price of, for example, what about the price of the credit spread market? Let's take a look. Credit spread market seemed to be giving us a bit of a storyline here, didn't it? Now, they've came off since the open. Fair enough, they've came off since the open, and we're starting to see a bit of pressure starting to build at top line prices. I'd love to see an algorithmic seller coming in at these higher prices, because that would give us a lot more confidence about the top line short coming into play here. But obviously, in terms of pricing up the volatilities, it still doesn't look like a sell, does it? Still doesn't look like a sell coming in. Look at those volatilities. Doesn't look like it's a short sell just yet. So I can't see even if I got a signal to sell it, I can't see how I'm going to sell it yet. I can't see it. So fair diddles. Fair diddles.